Alrighty, good morning everybody. Welcome to our pre-market planning session. It is July 15th, 2022. And what I like to do first before we get into what we want to do this morning is go back to yesterday and see what transpired throughout the morning there. So I do want to point out that right now we're obviously getting a really strong bullish breakout. So just be aware that up above current market price, we do have some general targets here for this to keep ripping. We're looking at, in fact, we came right into our expected resistance zone here and got a pullback of about 5 points, and now they're ripping right through it. So the next stop is going to be up into the 61.8 retracement of the whole sell-off from the sell-off all the way from the highs at 39.22 down to the low of yesterday. That is the 61.8 here at 38.46 quarter. And then we've got a little pocket here around 38.48 half to 38.49 half. So there's a little section right there that would make sense to hold if the bulls do get up into that area. And then we have our minor eye levels up above. So that's just to give you some local targets here if you did get long on this push. And let's go ahead and go look to yesterday. And I just want to point out all of the absolute amazing holds we got. So for the last 2 or 3 days, it's been a little tough. But as of yesterday, I've definitely recouped my losses from the 2 days before that. And I'll show you what happened here. So we came into the open, and I told you that we didn't have enough strong signals from the overnight low to tell me that we would actually hold this support level. You can see right here, this shaded region, hold that low from the overnight session and go ahead and rip higher. Everything kind of pointed to us continuing to push lower. And when the market opened, we opened very, very bearish. So market internals were all like, if I recall correctly, like negative 2,500 on the AD lines. The tick was like negative 1,500. And so the idea was to be short, expecting lower out of the open. So the first opportunity here was the push right to the 200 moving average to the tick. You could have got short at the 200, took 0 points of heat, and then this thing went, like I said, I think it went about 20 or 30 points lower from there. So you could have grabbed that right at the open. It was literally 2 minutes in. And then I got my first trade here off of the, in fact, there needs to be a red arrow because I told you could try getting short right off the fast moving average here. So that's where I got in. And then we wrote it down, and our expected support level was going to be this area here between 23 half and 25 half. So the market continued to sell off. I got in short again here off of the minor eye level 37.35, and that's exactly where we got this little micro bounce back up. So my addition to my short position did not work out there. But let's look at this. So we came back down. I got short again right into our first expected support level, and that was it. The low of the morning was that level. I mean, it's just unbelievable how well this stuff works. It bounces into the 200, comes down, bounces up into the FMA. Okay, comes right into our minor level, finds resistance off of it 2 times, can't get through, and then eventually we get the bounce back up. It holds the FMA, holds the 200, and there's just not enough strength. So when they get back below the FMA and the 200, look at what happens. Come down, come to the back of the FMA, and then bam, right to the top of the shaded region, and then right to the bottom of it, and then from there it starts to rip back up. So that's how the morning went here, and then we stopped trading right around 7:30. So after all of the opportunities to get short here, I told you guys there was one other thing you could have tried, and that was to get long off of our expected support level. So if you got long from again right to the bottom end of that support level, if you got that long, you got this huge rip higher from 37.24 all the way to, and we're just keep on pushing here coming into this morning. So that would have been the second trade of the day. If you see in our trade of the day section of the server, I put in the short, I believe, from 2 minutes after the open. That gave you 37.54 all the way to 37.24 for 30 points right into the expected support. And then if you got long off of the expected support level, you got yourself like 40, 50 points to the upside. So some incredible reactions. And then you can see here, and let's see if I can get this back zoomed in here. Just the price action itself off of all our levels is unbelievable. Right into 2035 again, pulls back right to the bottom end of the shaded region, comes up, comes to the top end of the region, then holds the minor eye level and the 200 again. It just was never ending, picture perfect trade setups all morning. Came down, held the 200 almost to the tick, failed at VWAP, held the 200 to the tick, came up, and then we held the VWAP and the 200 on the top end almost to the tick and came right to our major eye level to the tick. Hit it to the tick at 74.5, and then we got a nice pullback, almost bounced right off of the expected support and resistance zone here, and then we came up and had trouble once again at 74.5 and our orange power level. But then the bulls went ahead and recovered and ripped it higher. And you know what the high of the day yesterday was? The high of the day yesterday was this line right here, which I had to add after we got the major bounce. And that line right there, the 38% retracement of the entire sell-off, if you zoom out. So just impressive stuff. Right to it, broke it by like 1 or 2 ticks there, and then at the end of the day, it just kind of went sideways. So that's where it brings us here this morning. And look what happened. In the overnight session, let's see if I can zoom this over. The market came up, hit right into 38.12. I think it failed 1 tick in front of 38.12. Came down, held the back end of 38.07 quarter. And then when we came down the low of the overnight session, 37.82. It broke it, okay, it broke it by a couple of points or maybe 2 points max, less than 2 points, and then came up, held 07 quarter, but then pulled back and held the 200. It got sloppy in here, but then look, right to 38.12 again, pulled back to 07, bounced a tick or two in front, and then we failed. I was actually watching this in the pre-market session here just a few minutes ago, failed right in our next expected area of resistance, but then the bulls were strong and held the FMA and popped right through. And that's where we find ourselves this morning. Now I'm telling you that this type of price action, holding the eye levels to the tick, holding VWAP, holding the 200, pushing into expected support and resistance levels and getting almost magical reactions. This stuff is like every day almost. So it's just unbelievable stuff. Let's go ahead and jump up to the daily chart, and I want to look at what we are dealing with this morning as far as levels. So actually what I want to look at is major signals in the market, and then we'll look at the levels that we want to be aware of as the market opens here this morning. So let's go up to the daily and just look at the pattern that we actually got yesterday. So remember, a lot of you who are in the room right now are brand new. So all of these different things I'm talking about are going to be probably brand new to you. But we've been talking about this for a while, and if you watch some of the previous pre-markets, we talk about these larger time frame divergences that form on the charts. And I'm telling you that every time that the daily chart prints a divergence, and it's not every time, but you know what I mean. Almost every time that the daily prints a divergence, we get a 100, 200, 300, 500 point move. Now, sometimes they don't follow through. So sometimes you might get a bullish signal, like for instance, maybe right here, you get 08 on that day, and then it just kind of pops up a little bit and then it continues going. So it's not like every single signal is guaranteed 200, 300 points. But I'm telling you, if you find these areas, they typically are the beginnings of gigantic pushes. And I want to just see here, do I see a cup and handle there? To be honest with you, I don't really focus in on cup and handle patterns, so I don't know. You probably see the pattern better than I do because I don't really look for that stuff. Um, Familiar, a little bit more familiar looking at like a head and shoulder formation, but I really don't look at that stuff. I look for major signals using divergence and then basically play the levels in the market. And you'll see all the levels that we look for are levels that are extremely relevant. Like for instance, the high that we failed from when we got our bearish divergence a couple days ago, maybe a week ago, was exactly the 50% retracement to the tick. So it hit right to the 50%, and we got the bearish divergence on the daily, and then we sold off from 39.20 all the way to 37.20 for 200 points over the last few days. So I'm just looking at levels and then looking at specific signals that line up. And then as I'm trading, I'm looking at, market internals, underlying eight advanced decline lines, looking at the NYSE tick, and then using multiple time frame analysis. So we'll get into all that stuff, but the main thing I want to point out is that when you get a daily bullish or bearish divergence, and for me, I like using RVI to find my divergences, that is where you typically will get the major turn in the market. And when you get the 4 hour down here on the 4 hour time frame giving the same signal at the same level, then it's an even stronger indication you're going to get that move. So this morning, what do we notice here off of yesterday's low? We've got a really clean bullish divergence on the daily. So ever since then, ever since we made the low of yesterday, we've been in a bullish market. Now, overall, when you zoom out, we're obviously in a bearish market. But on the short time frame, when we zoom down to the 60-minute chart, to the 10-minute chart, it basically has been a bullish market ever since we made the low of yesterday. So, like the question's going to be this morning, do the bulls have enough strength? And I've been saying this, I think the majority of you in the room haven't been in the pre-market session, but I've been saying this for a while. I'm skeptical, even when we get these bullish, really clean bullish signals. I'm very skeptical of a major breakout. So every time we do get a bullish signal and the market bounces from there, I'm typically expecting it to fail somewhere at one of our resistance levels up above. I do not expect a major breakout, and that's because there's nothing going on domestically. There's nothing going on globally right now that would make sense for there to be a breakout. And then, of course, with that being said, I always have to make the caveat that the market's going to do what it's going to do, and it's sometimes very irrational. So I think I made this example yesterday. During the shutdown in 2020, we had a huge correction in the market, and then despite the fact that the whole world was basically falling apart, so there were talks of major failures of supply chains and all these things that were going to lead to horrible economic things into the going into the middle of 2020, the market just continued to rip higher to new all-time highs. I'm sure you guys are all familiar with what happened there. Every day the market just pushed and pushed and pushed despite there being more and more bearish kind of indications in the world. So even though I'm skeptical of a bullish breakout, I don't think it makes sense. That could be what ends up happening, but hopefully that makes some sense to you. So this morning coming in, the daily gave us a beautiful bullish divergence. That is something we do not want to ignore. We don't want to ignore that. So we've got that there. And then, as you guys know, or at least some of you know, we typically like to see the 4 hour, the hourly, and maybe even the weekly up top above the daily also agreeing with that signal. Now, the problem is the daily signal, when you go up to the weekly, there's just not enough resolution to actually see if there's an agreement there. And you can see the last 3 weeks, we've just been chopping back and forth, very, very sideways or balanced. But if we go down to the 4 hour, if you guys remember to yesterday's pre-market, there was a very spacious bullish argument from the lows at when we were up at 37.42. It's still there, so maybe a very, very rough agreement on the 60-minute and the 4-hour from that daily signal. So with that being said, let's jump on down and start looking at levels that we need to play with here coming into the open. So on the 4-hour, I like to look at the 4-hour to see if it agrees with what I'm seeing on the hourly and on the daily. And if it does, usually we will get the push in the direction that we would expect. So the 4-hour, like I said, does have a very spacious argument for that bullish divergence. Again, I hate doing divergence like this, but you can do that and make the argument that that was also a bullish divergence on the 4-hour from yesterday's low. So let's go ahead and go into the 60-minute and let's look at what levels that we want to play with here this morning. So above the current market price, above the high that we made in the overnight session here, we've got a bunch of levels that I've been talking about for at least a day or two. So if you weren't in the pre-market sessions for the last few days, then all of this is going to be brand new to you. But basically what we have here is major eye levels in light blue. These are the major areas of support and resistance in the market. You're typically going to see, if I could just draw very crudely here, just bouncing back and forth between these major levels. So if we hold, say, 16.5, which we did back from that major high where we had the bearish divergence on the daily, and we pull back, a lot of times we'll come down and we'll start playing above 38.22, the next major level, and then maybe hold 75, the minor level, and come down into 74. And so you'll see that if you look back at the major levels and the minor levels, you're going to see the market basically travels between the major and the minor levels and gets major support and resistance off of them. So, and we'll get into like how all this works eventually for those who are new. But up above, we've got minor levels, which are these kind of teal colored, or I think it's called dark slate gray colored lines. Those are the minor eye levels. They have you can actually see the level labeled on the right. And then the major levels are the lighter blue with the label on the right. So those levels going forward, I'm not really going to be talking about them because I'm getting tired of just mentioning every level, which you should already have on your charts and be aware of. And for those who are in the server right now, if you go down to the analysis section of the chat box on the left, you'll see it says eye levels. Those are all the levels that you see on the chart here. So if you go to the eye levels channel, you can copy those and get them on your chart. So up above, the major and minor eye levels are going to potentially be strong support or resistance. And then we have other levels that I add in that maybe are sitting in between the major and minor eye levels, but are still very relevant levels. So here's an example. Yesterday, we had a little pocket here that was between the two minor eye levels. This pocket, if I could zoom in so you can actually see the shaded region, was 23.5 to 25.5, a little 2-point pocket that made sense to be support going into yesterday. Well, what was the low of yesterday? 23.75, and the pocket was 23.5 to 25.5. It bounced at 23.75. So those pockets being in between the major and minor eye levels are also very relevant. We typically see a lot of reactions from those areas. So this morning, if the market continues to push, we've got the major retracement level, which you cannot ignore. Remember that the major high all the way back from a week ago or a week and a half ago was a major retracement level. And they came right into it to the tick. And that was where we failed, and we had the daily, 4-hour, and hourly bearish divergence. So this is the 61.8 retracement at 38.46 here of this push down ever since we failed from the 61.8 retracement of the larger leg. Okay, so be aware of that level. And then we have a little pocket again, these pockets are going to be drawn in areas where we have a lot of market interaction, and that don't sit at major and minor levels. So this pocket here, if we get through the 61.8 retracement, is 38.48 half. The bottom end is 38.48 half. The top end is 38.50. So that would be a pocket that would make sense. I would not be surprised if we came right into there and got either a pullback or some type of major retracement from there. So we've got that. We've got the minor level. And then it's just a couple more things until we get back to the major high from a few weeks ago. And that is this pocket here from, and let me zoom in and get the numbers, 38.83 half to 38.86. Another area where we could very well push into and get some type of smack by the bears. And then finally, before we get to that major high that I keep on talking about, we've got the gap that was never filled when we think this was Sunday going into Monday of this week. Yeah, so Sunday going to Monday of this week, we got a gap. Well, basically from the close of Friday coming into the Sunday Globex session, and that gap was basically 3,900 quarter, I believe, up to just about 39.05 half, or it was like 3,900 even to 39.05 half. That is the gap coming into this week that hasn't been filled yet, so be aware of that. And then we're right up into, again, that major retracement level where the market failed a week and a half ago or a week ago, and then the major level happens to be just a few points in front of it. Any further from there, if we break out from that high of last week, we've got all the major and minor eye levels up above us here. And like I said, I'm not going to sit here and list all this stuff out because we've got it all listed. All the major and minor eye levels are already listed in the eye level channel, so you can go and get those. And then there are some other little levels that I don't have mentioned here that I'm not going to talk about until we actually get up through that major high at 39.22. So up above us, the plan this morning should be, if you're long, to target into these different areas of potential resistance. And again, you could potentially play them as shorts. So you could short these levels expecting there to be a pullback. So either way, they work. I like being long into these levels to take profit in case they fail, because we are in, like I said, ever since the low of yesterday, the beginnings of a little short time frame bullish move. So rather than fading it, I like to be long and take profit at levels that could potentially act as resistance. We're running out of time here this morning before the market opens, and that's mostly because I had to mention some things that I probably didn't have to mention if we didn't have new members. But there are a bunch of things down below current market price here, and then stuff below the low of yesterday. And like I said, I don't think we're going to have time to get into all that. But for everyone who's going to be here trading this morning for the first hour with me, at least we're going to have them on the chart. So remember, we've got the major level at 22 that we just breached here in the overnight session. We've got the power levels, which I'll have to go over next week. And then again, a lot of these are just major and minor eye levels below us. The final thing I have to say here, I think the market's literally 5 seconds from opening, but the final thing I want to say is that once we finally get a top, if we finally get a top and the market starts to pull back, we will have this fib from the low of yesterday all the way up to whatever the high is when we get that apex and the market starts to get a deeper pullback. And then that's when we'll draw the fib on. It could be just from where we are right now, and then we'll have our major retracement levels back down as well. So until we make that high, we won't have that fib leg. So market is open. Let's see what we can do here this morning. I'm going to be basically telling you what I see and giving you the areas of highest probability for interaction, for actual turns in the market.